Hey, what's up, guys? If you want to learn how to properly observe and find support and resistance, then stay tuned. Now, I'm going to be giving information about trading stocks that normally you would have to pay for, but I'm going to be giving it away for free. So if you would like, you can donate whatever amount you think you found this information to be helpful. I'll have the information at the end of this video. Let's get right to it. Alright, so here's DGAS right here. Support, resistance, resistance. Okay? Breakout of resistance. Very easy. And as you can see, I don't trade with the hourly. I use it to basically find resistance and support areas. Right there. And then let's find it on the 1 minute. I use the 1 minute to observe the very first start of trends. Here's this down move on the hourly, break above the 50 and 20. So as you can see, this dip down move does not mean that the stock is going to go down. It is just an indicator. This bar right here is an indicator of the market possibly going down. So if you were able to get in, if this was open, if the market was open during this breakdown, up, down, could have got in at a this is a very strong bearish indicator. Down, up, breakdown, mini bear flag. I refer to the majority of patterns as bear flags and bull flags to keep it simple. Obviously, this is a pullback right here. You could say it is a bull flag continuation. Okay, I just look at it that way. That's me. It's really up to your preference and however the best that you can be able to trade. Alright, mini bull flag continuation right here. So I would have exited right here just for a nice short entry. Okay, now does that mean that just because you get this that it's going to do this, make this do this rally right here? No, you still have the 50, you still have this 50 to test, and the 20 or the 20 right here was tested right here. We had the initial breakout. After a breakout of some type of moving average, there's going to be some type of test, just something. This can actually consolidate, hit the 20, or maybe this breaks out, and now you have a breakout of the moving average to some type of degree of a test, of just some type of pullback, of just something, just some type of reassurance that the market is going to continue upward. In the case of the 50, it was this area right here. We had the breakout of the 50, and there was some type of test, some type of observation whether people were still willing to continue buying and staying in this uptrend. Obviously, you want to trade at or near moving averages, where the breakout test and up. So right here is where you would have entered, or if you want to do a safe play for assurance, the double bar green. Alright. See, support, resistance, support, resistance, this red bar. This is really good information. I hope you guys are getting a lot of input on how to better your trading here. resistance, support. Now as far as support, this bar is at the lowest. This bar closed at the high right here, but opened right here. So to keep your losses low, if you were to trade this on a double bar green, to verify that this is going to go up, right here is where you would place a stop right here, or you can manually exit. I personally manually exit, or have this. That is the trading strategy that I use if a second bar order. Actually, you have the breakout, and this actually just continued to break out. So this is a risky trade. If this is, here's post, here's pre-market in the pink. So you can see how this can be difficult to trade. Yeah, so she already had the breakout. This is a gapping stock, and this is why gapping stocks are very tricky to trade unless you have a gapping stock that does a test on the open and then continues upward. Alright, support, resistance right here. This bar has over trading, but we have the close right here, and then we have the breakout. Now if you want to play it safe, obviously this point right here, if this bar were to close right here, that's actually a huge indicator of a from one of the people that I've learned from, they call it a J hook. This is somewhat of a J hook. Now keep in mind, I continually train myself and observe other many stock traders, and this is basically what works for me. Rick Sadler, I believe, is his name. If I butchered that name, my apologies. But that's where I learned the this J hook, quote unquote, pattern. All right. Support, resistance, pullback, breakout. Here's that resistance, then you have the breakout. Okay, but this is very tricky because it's already broken out. It's got a huge gain for whether it goes up or not. That's up to the market. And as you can see, it's already very choppy and difficult to understand. So you would have had to get in at least right here. If you just traded a this breakout right there, here's your test. So you have the breakout, and now we're waiting for the initial test. There it is, and it starts to break out. All right. Now you may be saying, Kirk, well, what's a stock that I could actually trade that is not pre-market? That is a good question. And here is a beautiful looking stock that resembles NASDAQ, S&P 500, the Dow, and it's just basically a stock that is going up. Now let's find that to, okay, so it doesn't even have a 200 on the daily, but this does resemble this market currently resembles the market to a degree. At this point it did not, so the market currently is favoring this stock. Very simple: bull flag continuation, bull flag continuation, bull flag reversal, maybe continuation. You'll really have to see. Apparently this stock is doing now bull flags are known for continuing the trend, as you can see here. Bull flag, bull flag, bull flag. How would you trade this for daily. This is actually pretty difficult. This would be somewhat of a high. Let's see what the risk would be. Now to find out your risk, you would have ended right here. If you really saw this, you would have seen the pre-market, this little pullback, and then she opened right here and started to break out. So if you were watching this pre-market, you would be in right here. It's a very system starting to. So this right here is a looks like something's wrong with the system. Looks like we got a bug. This is why I personally like the the charts for this website, which I pay a premium for. But sometimes because it's online, there may be some bugs. So I prefer if this could be something that could be on my desktop, that would be great. So this is a very bullish play. Green, red, green. And your exit would be, let's say you entered right there. Yeah, it's a pretty big loss, possible loss. Here is support. So anything within this range, you would want to possibly start considering to get out. And then there's a $400 loss, $420 plus the fees for whatever your brokerage. So this would be possible $440 loss right there. But the daily looks great. The hourly looks great. You have this pullback. You would have seen this right here, 1274, 1274, 1250, 30. That's actually right here. Well, there's your possible loss right there. It's a big loss. So this would be very tricky to get into, because this is a big loss. It's $420 possible loss. Obviously you stayed in based off of your location where you entered. Your low risk would be somewhere right here based off of this 8T line. That's what's great about just smaller moving averages, is now you can use them to help in a shorter trades and lower losses. Now if you have something like this, bull flag continuation, little bull flag, and then you start having this breakdown, now you have the opportunity for the first time the stock pulled back on the 18 line. Now you have an opportunity to take home. This would be what, $620, depending on your. So this would be a $640 trade, but depending on your broker, whatever they're charging, maybe it's $10 or $20 per trade. This would be about $620. So now you have the opportunity to exit and take in the green. Right, so that would have been a $200 loss to get a $640 gain. Okay, now you're taking a risk. If you stay in, you now have the opportunity, because of this bull flag right here, continuation, you have the opportunity to stay in at this level right here. Because you're already in the green, you have support in this area. So if you wanted, you can risk all that extra with $300 to take a loss here. Right? So now you're kind of like, this is where greed and starts to take place. Well, if I stay in, who knows how long this trade will go in. I would obviously, I'm going to ask down below, where would you take it? What do you think is best? You have your possible loss, which, let's say you stayed in, and you got this pullback breakout, and you have the first time that you're seeing this right here, you're at $640. Anything could happen. And you know what, you say to yourself, okay, you know what, I'm in a good position. I'm going to go based off of the breakdown of the 20, which you can. If you're close to the 20 and you have this breakout, it's possible you could make more money. In this case, if you had stayed in, the first time she broke down was right here. That's a full bar below the 20, so that would have been a $910 gain. Now it doesn't always work that way because the market is volatile. Yeah, so you have the opportunity. Obviously, if I traded here, I would wait. If I traded here, I probably would have waited for a 20. If I was able to trade here, I would have waited for a 50, some type of 50. So based off of so as far as moving averages, it really doesn't matter which one you use. What matters is the observation of price with moving averages. Now our time is starting to, we're starting to lose time right here, but there's your opportunities right there, $640 entering here on this bullish play, green, red breakout. A low risk of losing more money would obviously be this 18 line, because that's where you're closest to. And if you were able to trade near the 20, then obviously you would want to get out the 20. If you were able to get here, you can stay in a little bit longer and see how much you can get off of that. Sometimes they vary. Yeah, sometimes they'll vary. Sometimes this will hit the 50 and continue up, or anything could really happen. So let's see what happened here. Yeah, so look at that. She broke down, came back up. And here's the vision of the future of what could happen. This is how far you can see. When she breaks down, does this crazy stuff, who really knows except for the market, the people that, the market. And then so we have our breakout, and then breakdown. So she finally broke down right here, and then you get something like this, which is, so obviously this post and pre-market is the challenging part. The market is up, and anything could happen as far as pre-market. This can gap down, and you would be basically trying to get shares to get out if you're watching the pre-market or post. So even if you trade here at the end of the day and this does this, who knows what's going to happen here? Who can really see the future, which the market does do, and they can reverse. The market can reverse as it did right here. The market is at highs, so now people need to take their profit, and then investors will be buying right here. Alright, so I'm just going to do one shorting example. This is a gapping stock, obviously. Yeah, so here's that move. It's up, but then post she went down, and then pre she went up, and then all the way down here. So if you had bought here, you've been trying to get shares to get out of the trade. Who knows if you can get those shares. Support, resistance, new resistance right here. So here's, from here you had consolidation, and then from this consolidation you have resistance above, support below, and you have your breakout, and then new resistance, and from this point right here you have the break of support. Okay, support, resistance, and you have some type of small resistance right here on these 2 days. So let's find a stock that you would be able to trade as a retail trader. Let's see. And then we'll call it for the day here. Okay, yeah, so these are definitely tradable. Here's your test of the 20, test of the 50. So you have 1, 2, 3. Here's your third pullback, which you're taking a big risk if you were to enter. Your loss would not be that much. It would have a $50 possible loss, 50. And if you really want to trade off of the that's trading off of the 50. Now if you want to base your trade off of the 20, your loss would be a little bit lower, so 30, 40, 50 dollars. Obviously your stop would be right up here if you're really like the stock. I really like the stock. You can see why I like that stock right there. Okay, trendline break, there it is. The hourly looks great. You'd even say this is a reversal. Bull flag, a little bit of pullback, somewhat of a continuation, then reverse, then the stock reversed from this uptrend right here at this spot. There's not a lot. There was just post market, and then the rest was just regular investors, which is great. So usually when you don't have a lot of post and pre-market, the people are able to decide more on the trade itself. This is what it appears. This is what appears to be happens. Yeah, because when you get post and pre-market, those are usually the big companies that can literally move the market. They decide to move the market. Alright, so we've taken a look at the possible loss if you entered on this trade. We see this crossover trade. We see this right here. So let's go to 1753. 1753. There. So you would have seen the crossover, and then you have the 5 and 8 T lines. She closed down below here. So 1748. Yeah, so she started going down. Day prior, pulled up, and then did this play right here. This breakdown of support. So if you were watching the stock right here, this break, so we would have needed to get in right there. And why would you need to get in right there? Because of that bar. Because of this bar is a trendline break, bear flag, continuation. So let's see what your possible gain would be if you traded off of the 50. The 20 is respected. 20. Now there's that bull flag. Now you have a decision to make as far as whether to go off based off the 20 or 50. Okay. Now if you're a low risk trader like me, I would have took right here. But if you were looking at the hourly can help in whether to stay in or not. And with that, you would just need a keen eye. Yeah. So actually, if I were seeing this right here, I would have seen down, close at the low, close at the low, close at the low. So even this right here was a 1730, about 1730. 1730. So the hourly still showing down with the 5. As far as price in reaction with the 5 and 8 T line, T lines are saying down. If you look here, you have the 5 and 8 T lines, and it's showing down, and you have your first crossover right there. So if you can observe something like that, you can decide, hey, I'm gonna wait for a breakout above the 50, and here's your first breakout right there. That would have been a $770 trade. All right. Well, I hope you guys found this information extremely valuable. Like, sub, comment, and share this video. Have a good day.